Well, global and local stocks have been trembling so far today ahead of the release of U.S. inflation data that could point to the Federal Reserve's appetite for more aggressive rate increases. Michael Treherne is portfolio manager at Vestact, with us as always to talk about the latest movements. Michael, good to see you. Let's, as always, begin with an overview of where we stand now.
Yeah, afternoon, Tavakile. JSE All Share currently down 1.2%. Our market's busy playing catch up to the rest of the world. We were closed yesterday. Global markets were down yesterday due to weak Chinese data coming out. But as you mentioned, the focus of global stocks today is inflation data out this afternoon. Where will the Fed go based on this data? And that will give us a good signal this afternoon.
And do you think that the Federal Reserve in the United States will show signs of a more aggressive appetite towards increases as far as rates are concerned?
Yeah, so the expectation is for inflation to start slowing this afternoon, quite significantly actually. So if that is the case, if inflation does start to slow, or the inflation reading is a lot lower than the previous months, then it will show that the Fed's aggressive rate hikes that they've already done have worked, and they don't need to be as aggressive going forward. If inflation comes in hotter than expected, which is still a possibility, then there's a very good chance that the Fed continues on its path of very aggressive rate hikes, and that would be bad news for stocks. So as an investor and as a consumer, we're hoping for low inflation readings this afternoon.
And here at home, something worth talking about is Eskom's proposal that households would pay fixed charges before using electricity. What does it actually mean for already ailing consumer pockets?
Yeah, so Eskom's saying that their current pricing structure is out of date. Currently, we pay a variable cost every month based on your usage. They're saying that isn't accurate because part of that variable cost is already a fixed cost that they've just put in there. They would like to break it out so that consumers can clearly see what they are paying, the fixed part and the variable part. Part of that includes billing consumers based on what time of the day that they will be using electricity. So during those peak 4 to 8 o'clock at night periods, your costs would be higher than usual. Eskom say that the revising of the cost structure will actually reduce the average bill by about 4%. So that would be good news. If you're someone who's stuck solar on your roof, though, then this restructure and putting a fixed cost in, which would actually cost you more money. So it all depends on what your monthly usage looks like and at what time of day you're using most of your electricity.
Shout about Quilter, Old Mutual's former wealth management business. It says that the pace of net inflows tumbled in its half year to June. How should we read that performance?
Yes, the global stock market has been walloped this year. So since December, end of last year, the assets under management are down 12%, from 111 billion pounds to 98 billion pounds. They did note that was because the market dropped, but during the period they did see some inflows, but less than previously, and that's a factor of clients not wanting to add to portfolios during downtimes. It is worth noting that Quilter is currently being explored as a buyout option by another competitor in the UK, NatWest, and that's helped elevate the Quilter share price over the last 2 weeks.
Michael Treherne, always good to speak to you. Enjoy the rest of your day.